When life knocks you down, and life will knock you down, try to land on your back. Because if you can look up, you can get up. Welcome to Fire with Dr. Ninja Turtle.
Hi everybody, welcome back to Fire with Dr. Ninja Turtle. In my last video, I talked about failing forward, and I am still failing forward. I also talked in a prior video about the messy finances that I have going on here in April. In this video, I'm going to talk about what I'm going to do because taxes were part of what messed me up here in April. I'm talking in this video about what I'm going to do in the future with my taxes. In my past, I've had a CPA, and a CPA only tells you about the past. They don't plan your future. And I've asked my CPA to help me find a certified financial planner here in my town, but my CPA never got back to me on that. And so I have done over the years my own trying to figure out my taxes. And that has been good and it's been bad, but it has taken me year after year after year. So you try something, it goes well. Then you have to adjust it a little bit the next year. Then you buy some properties or you do something else. And now you have to reset and try something else with your taxes. But basically, in short, it's all been me. I've been guessing at my taxes for the last 10 to 15 years. And now I finally found a certified financial planner that's going to help me plan my taxes for the next 10 to 15 years. So let's talk about some of the things that I've done in the past to plan my own taxes. When I was working on a W-2 job, I went to HR and I said, I want my 9 to 5 income to go to my 401k. That lowered those taxes. Then I had to go to my side hustle income and try to lower those taxes. And that's what I mean. I was trying to figure everything out on my own. And it's hard for me to figure out what my tax bracket is going to be. I never know until it all comes out in the wash. I've done the same thing with real estate. I try to have depreciation on my rental properties, which lowers my income. And also with real estate, you can write off the taxes, you can write off the interest that you pay on the loan, you can write off the maintenance. There are a lot of write-offs with real estate. And so what I did in the early years before I knew anything about real estate was I wrote off everything, and I ended up losing money on paper to the IRS every year. And my CPA told me many years ago, you cannot keep losing money to the IRS. They're going to wonder why you're in business. So let's talk about, one, how I found my certified financial planner. There is a podcast called Camp FI, and Camp FI is for Camp Financial Independence. It's where people in the financial independence, retire early movement go to a week-long retreat with other people who have retired early or are planning to retire early. They have podcasts of presenters that are at these week-long retreats. And I watched a YouTube video of a presenter who said, this is why a financial planner helps. And I always thought financial planners are no good because I never found one that could help me with real estate. Well, I tried to find this person and she was all booked up, but someone else in her office said, I can help you. That person again said, I can't help you because you're doing real estate. But what that person did was they checked all their other offices across the country and they found me an office in Phoenix, Arizona, who helps people who own real estate. So I set up an appointment with the people in that office. They are setting me up with their tax people in their San Diego office. And what we're going to do is, one, we're going to change my taxes. They came up with a 10-year or 15-year tax plan for me, and I like their tax plan. Now, one of the things that they talked about was making me W-2 income within my LLC. I didn't understand that. I didn't know how that worked. So I'm going to read you what it says about being a W-2 within an LLC. It says, in general, an active member of an LLC cannot receive what is commonly known as W-2 income. This is due to the fact that an active member is not considered to be an employee in an LLC. The only exception is if an LLC has elected through the IRS to be treated as a corporation for tax purposes. In the event that an LLC elects to be treated as a corporation, it must then pay income tax on all profits, as a corporation is considered a separate legal entity from its owners, and it may then employ owners or shareholders as it sees fit. So I believe that's what I'm going to do in the future, and I will report on that in future videos as I'm meeting with the tax planning people at the CFP firm, and then I'll also talk about my 10-year plan with the people in the Phoenix office that help people with real estate. My question for this video is, what is it that you do each year to try to adjust your taxes and try to figure out what is your best tax optimization? I move my money this year into one school has 100% of the paycheck going into traditional, which lowers my taxes each month. But then another school, I have it going 100% into Roth. What that means is that I pay all the taxes at that school. So basically, I'm cutting my income by 50% because I'm putting half of it in traditional and the other half in Roth, where I'm paying the full price. And then when you add in my pension, this will hopefully lower my tax bracket, as opposed to two full schools where I'm paying all the taxes plus my pension plus my real estate, which pushes me up to a higher tax bracket. As I mentioned, I have depreciation. I have other things to write off from my real estate income. So I can lower my real estate income almost down to zero, almost. But what I'm trying to do is every year I'm trying to lower the amount on paper that I pay the IRS and take as many deductions during the year as I can. Let's talk about how millionaires and billionaires keep their money. It's called the buy, borrow, die strategy. This approach involves buying appreciating assets, borrowing against them at low interest rates, and eventually passing the assets down to heirs with little or no tax liability. This is done in the stock market all the time. I'm going to be doing it from a real estate perspective. There are a couple of things that I can do to borrow money against my real estate, which is an appreciating asset, and not pay taxes. One, you can refinance properties that you already own. Let's say I have a property that's already paid off, and let's say it's worth $100,000. I can probably borrow $50,000 against that property, but that's not a taxable event. That's not income. That's just a loan against an appreciating asset. Also, what I'm going to do with this certified financial planning company is I'm going to eventually sell my properties, and there is a thing that you can do with the IRS and real estate called a 1031 exchange. And therefore, you roll all of your capital gains without paying any taxes into another real estate investment. And so that's what I'm going to do. Now, depreciation on rental properties goes for 27 years. So once I've had some of my rental properties for a long time and all of the depreciation, which is where I get my tax deductions, runs out, then I will sell those properties, take all of the capital gains, and roll that into another real estate investment through a 1031 exchange and pay no taxes. Now, when I die, there are still no taxes to be paid because that will all be passed on to my heirs. When I do the 1031 exchange, I am going to invest in triple net commercial properties. If you haven't heard of triple net commercial properties, this is a triple net lease. is a commercial real estate lease where the tenant is responsible for all operating expenses of the property in addition to the base rent. This includes property taxes, insurance, and maintenance. The landlord receives a fixed net income from the base rent and is not responsible for any property expenses. Basically, I don't have toilets anymore to manage. I don't have tenants to manage. I don't have to pay property taxes or anything. I own the building and not all of the stuff that goes inside the building. The tenant is responsible for everything in the building. And typically these could be hospitals, they could be manufacturing buildings. That's what I will invest in when I do a 1031 exchange in 10 to 15 years from now. As I end this video, what I'm trying to say is that I am moving from looking at the past and doing a historical perspective on my taxes to looking at the future and actually planning how I want my taxes to work. And also, with everything that I'm doing, I will be able to choose what tax bracket I want to be in every year because I could choose to take some money from Roth. I could choose to take some money from my pension. I will have many more options for my own tax bracket in the future. And so the quote of the day comes from Bill Gates, and it says, "Success is a lousy teacher. It seduces smart people into thinking that they can't lose." Remember, never let your past determine your future.